has moved. And we're on the 30-minute chart. A significant bit. And right here we see, you know, oh boy, that's run its course. It's run the entire daily range right there. And then starts resting. Now it's resting at the 23% fib. It's also resting just this little channel right across here. When that happens, guys, remember that that consolidation, that type of price action will also shrink our take profit and stop loss points. Why? Because we're after price action. We're letting the price action tell us. You haven't heard me talk about this before, so I want to take a moment to explain that. We're always after, will the price action move in a significant direction with a lot of strength? I want to be in that move. You see that move right here. Now because of that, my take profit target is 50 pips right here. My stop loss is about 60 pips. Close to 1-to-1 ratio. But you see that the widening of that. Why? Because the price action's moving. And our Rubicon indicator and the algorithm is responding to that. As it finds a consolidation zone, look what happens. My take profit is only 4 to 15 pips, and my stop loss is only about 20 pips. That's too little for a 30-minute chart. But no, the reason for that is it's compressing. The price action's compressing. Now, when it breaks the second time right here, we've done a couple of things. We're stayed below the 140 level, which is right here. That was the attempted pullback right here. Hit the 140, and you see that going back to the left. You see that level in play. Let's bring it right to it. Literally the top of that. One candle, 140. It's held below that, and it's held below, equally important, held below the 23 fib. And remember that 23 fib is off a daily chart. It's off a daily chart. So when we see the second opportunity over here of a breach of that signal line, bingo, good to go. Really, really good opportunity right there. Now down here, remember, never forget, guys, to check your daily range. Let's pull it out more. So just for today, bottom to top, top to bottom, that currency had run 142 pips. That's outside its normal daily range by a little bit, but outside its normal daily range. It had also formed a double triple top right here. So anybody wanting to go short after that, you have to know you were absolutely nowhere near a high probability trade at that stage. That wave is coming to an end. We already had 3 opportunities in that wave to go short. It's beyond its daily range. It's formed a double bottom. What's our normal take on it then? Our normal take then is that it will come back and test at least a 23% Fibonacci on that move down. Now, if I want to do that, I can take a look at the move, the high, double top to double bottom, just within the last 24 hours. Let's change the color of that fib. And look what happens. Where does it go to? It goes to the 23% of that move. That's exactly what held it from about, I think it was around 9 o'clock this morning, maybe 10, but for the rest of the day, that 23 fib came into play. So there was actually, from this point on, it was long, except for one big ass thing, excuse me for the language, but that was the 4,300 level. Like I said before, never, guys, never forget the 0-0. You will ignore that at your peril. I got caught myself this morning because I ignored it. I kind of did fine. I got out of the trade, but when I was in the trade and I realized, oh my God, I'm at as close to a 0-0 level, I had not paid attention. So sometimes when I tell you things, guys, there are also mistakes that I can make. And I've been doing this a long time, so when I go over things, I can never be redundant in what I say, because these same rules apply to all of us, whether we're advanced users, advanced traders or beginning traders. The same rules, guys, believe me, absolutely come into play. Now, Harry's got a point here, and that is there a historical way to know how long channels last on a given currency, or do we just wait for the breach? When do we know when we have a true breach and a reversal in any direction? Very good point, Harry. If I go back out to the daily chart, and we mentioned it already, Harry, but I'll go over it again. My point on the daily chart was, it looked like we had a breach, but we never did. How do we know we have a breach? When we see a candle fully formed and above and closed and above that trend line. So for example, I'll get it easier on a 1 hour. Let me go down to a 1 hour chart. Find a channel. Okay, Harry, just 1 second. Let's assume this is my trend line here, Harry. No breach. Until here, I have one full candle, fully formed and above the trend line. That's the breach to the upside. Or it's an actual breach. Now what I'd have to do there is then my channel becomes this. And then we get the breach, and off she goes in the opposite direction. Does that make sense, Harry? Once it fully breaches, off she goes. And you have to wait sometime. And sometimes this is what will happen. The breach is boom, it's a spike. It's a spike right through. I don't really know until all the way over here that I'm fully free of that trend line. But look what I got then to the upside. You know, a very big run. That's kind of a false channel that I drew there. But does that make sense? Okay, you got it. All right. Hopefully everybody got it. That's a very good question, Harry. Good point right there. So if we were looking at this baby right here, again, I got to get rid of some red lines. Bear with me. Now I want to leave this red line on it here because remember, I'm going to change the color of it because that's actually coming from my daily chart. So we'll make the daily chart a purple, and I'll make it thicker so there's never a misunderstanding that that trend line is a daily trend line. Now, always, if we ever come close to that baby, that's a very important one because it'll be more significant support or resistance. But inside that, if my trend line had been here, right? I'm looking at a possible break here on the 30-minute, but there's no break yet. You see how it's actually holding it? 1, 2, 3, 4, 5, 6 candles. So for 3 hours, a couple of things are holding that. One, our trend line, our longer term, big trend line is holding it. And I'm seeing a resistance level right here, which, interesting enough, that green line was our potential entry point earlier on, and that you'll see that quite a bit. Now, I also, you heard me say last week, always move to the left for confirmation. I want to see, is there anything else telling me that that resistance line here is in play? So squeeze and move to the left. Take a look at the chart. And looky, big surprise, surprise, guys. That same resistance level that we're looking at for the last 3 hours on the 25th of July was support twice. On the 22nd of July, it was support. On the 21st of July, it was initial resistance and then it broke through. So that same level, which seems to be nothing significant because it's sitting at a 37 I should say, 36, 37 level, seems nothing significant. When you look to the left, and my saying is like crossing the road, when your trading currencies always look to the left. Okay. David, not sure why I would do that. I'm not sure what you mean by that question. For trend lines, why don't you use candles open and close prices? I want to see where the action, again, I'm not, let me clarify, I'm into price action, David. If the price action goes all the way to a level, I want to know that. Make sense? Okay, one other question. Ken, that's a 43.25. From what chart? What time frame did you draw that on, Ken? And what? I'm not sure I know what you mean by that. Does that make sense, David, what I said to you? On the daily chart. Let me get rid of this guy. Going down or up, Ken? Give me specifics there on that. Very good, Harry. Very funny. Harry made a point. Looking to the left only works in certain countries. In other countries, if you look to the left, you could end up dead because you're looking the wrong way from the traffic. If you draw trend lines using a completely different system, David, that's fine. Do whatever you want. But this is, the system that we use. If you have a different way of doing it, that's okay with me. Or you have a horizontal line, Ken. You are confusing the living daylights out of me. Okay, I got it. Now, before I leave the daily, Ken, you brought me back here for a reason, so don't worry. What I do want to say is this, guys. Remember, that was our original trend line. We never had a break. So we now need to push that trend line to here. So the upper end of our channel is now up there. Remember, this is a daily chart. And I'll redraw the bottom portion so they're both the same color. And again, remember, all we're talking here is support and resistance. We're still trading our Rubicon because that's the name of the game. All I want you to do is look at the bigger picture so that we optimize our trades for higher probability trades. And that's a lot to cover. So keep the questions coming, guys, because the questions are really good. I'll take a little breather here, let you get in some more questions, and go through some logistics. A couple of big things, announcements that I have to make. Number one, our Tuesday webinar, the TEF webinar, will be going away, guys. Why are we going away? Because we want to move everybody over to Rubicon. This is our updated indicator. That's what we want everybody to be using. Now, students who are our students who are with us, and your coaches will probably be telling you this, but we've actually sold our coaching business to another company. There's still a coaching company, so everybody will continue with your existing coach and take you all the way through. So don't worry, that's all intact. But because of that, we're closing down the TEF training room. And the important thing about that is we have a Rubicon Indicator trading room. Specifically for the Rubicon Indicator, we have a really good guy doing it. That's Geoff Beckstrom. Actually, is Geoff in the room? Yeah, Geoff is with us today, and I want to say hi to Geoff. And thanks for dropping in. If you have any thoughts you want to post, just let me know, Geoff, and I'll relay them. This is a professional room based on the Rubicon Indicator. And do know that all of you guys, every member of Rubicon and every former, TEF person, Traders Edge Forex person, can join the room for a full week trial. No credit card needed. Just go in and try it out. And then afterwards, if you like the room and you want to continue, there's a big discount, almost a 1/3 discount for Rubicon and TEF members. And that's $69 a month instead of $99 a month. So I want you to know about that. We want everybody coming over then to the Thursday. The Thursday